We do a lot of value investing, growth investing, focusing on stocks, not exactly technicals in the market. But I think it's really important to understand what other people think, and that's important because let's say you want to be contrarian, you want to go do the opposite and find the small places to make money where no one's looking. Well, you have to know what other people think, for example. Or you just want to look at the general market. Well, you might have to have an idea of what the general people who invest in the market think. Now, not all of them, but a good portion of them believe in Fibonacci numbers, for example. And the idea is that the market kind of moves back and forth with these ratios. And, maybe there's an idea just simply when you look at a chart, oh, that high looks too high. I can't imagine it going higher. And it might be something subconscious with Fibonacci numbers that we see in day-to-day life. Or maybe they're looking at the number and, oh, it's got this much percentage or whatever it might be. To be honest, I don't really think it matters. And it might just only work because everyone believes in it. Well, not everyone, but certainly enough people believe in it. And I think that's really important. And that's why I just want to look at some of the technicals because, as I've been a little bit on this, I don't know if I bring it up a lot, but probably enough, that I've been bearish. And I think that there's going to be a correction soon. How soon? And am I wrong? Well, let's look at some of the technicals. And I think it's also important to know that this gives you a good gauge because you could just go bearish for the next 10 years and miss a lot in the stock market, especially if it never happens. So when, for example, would I reverse my case? And this is why I think it's important to have some technical basis. So even when you're looking at value stocks, you're looking at all these things, well, maybe you'll get a much better price. So you want to consider what are other people thinking about the price. I know that's not usually what value investors think, but I do think it's a little bit important. So let's go forward. Let's just see what's happening. Are there any red flags in the market? I think there is one, but it's very possible that it'll pass and be nothing, but it's something to be cognizant about. So for example, you can see this Fibonacci number over here at 381, it says 0.8, but I drew these Fibonacci sequences not exactly precisely. So at the 1.414 level, it's at 3.8. And you can see if we go over here on the far right, when it got to 381 or just about, it hit some resistance. And in fact, it fell down below 381. You can see actually a week before that green line that popped up to almost 380 and then came back down. And then there was a few trading days here right underneath this white arrow where it kept butting up against that resistance. And that's possibly, not necessarily, but possibly because either this Fibonacci thing is somewhat true or just people believe in it. And so as it gets closer, they're getting more nervous about their holdings. And you can even see that it actually fell to 375 from that 381 spot. So is that the down market? Well, let's look at that. First of all, it's a 3-day long weekend. Maybe people are just selling some of their stocks because they're nervous what could happen over 3 days. Who knows exactly? But let's look at some other indicators on this exact chart with these exact Fibonacci numbers to get a little bit of a better idea. So if we look over here at the next line, right, 366, once again, not exactly precise, you can see that there was some resistance right at this arrow. That red line above came back down, hit it again, came back down, and then it finally passed. So just because there's resistance does not mean that the stock market, the S&P 500, which is what we're looking at, really the SPY, but it doesn't mean it can't pass. It just means that there's resistance. So once again, and it's pretty impressive how often you can look at some of these numbers, right? The 100% mark, which is pretty much where we were at the high. You can see that there was some resistance here, blew past it. Some resistance here, right? It kept going back and forth here. Some, and as you see these peaks and troughs happening, you see that they're kind of happening around this resistance at this 100% mark. It's going above, below, almost the same distance. It's pretty impressive how this number is somehow playing into this mindset. Now, let's be clear. It's not exactly the resistance that's going on before or support that was going on in the previous two cases, but you can see the numbers playing some sort of role, at least I think. Maybe I'm just looking for patterns that don't exist, but once again, this next level at 314, you can see that when it went above this number, it shot above this. It didn't go slowly, and when it went below, it jumped below, and then it kept hitting resistance, right at this white arrow. You can see it, and then it dropped below, and then finally came back, and of course there was resistance even when it was trying to come back. Next level, right, at 295. You can see resistance hit there, went back down. A few days later, came back up, resistance went back down. Then it jumped up and kept going. Okay, next point of resistance, for example. Well, there isn't really much resistance there. Maybe you could say there was some resistance over here where it hit it or came close and then went back down and then came back very fast. Okay, but what is clear is these numbers seem to play a big role and a big mindset in other people's thinking. And I want to be clear, this is not investment advice. Please, if you want to hear more of this exact stuff, don't subscribe. But if you want to hear a very balanced and analytical approach to the stock market where I'm going to consider everything that's going on, not just the book value, not just, some numbers on a chart, not just the product, is there a good story, or is there good growth prospects? No, we're going to try and get kind of a good sense of everything going on so we can try and be as safe as possible. A little bit of a jack of all trades, I suppose, but we're going to try and specialize in finding stocks that are good value, good growth. That's the plan anyway. And we were very lucky when there was this crash to find those, but possibly lots of people did. Nevertheless, the point is, at this point, I told you a few videos ago, I sold all my stocks. So what's happening now? Will I buy some of those stocks again? Do I expect them to go up? Well, right now we're sitting at this 381. There's resistance, but you've just seen case after case after case after case where it hit the resistance. And hey, it came back down, but hey, it went right back up, and that's really possible. And we might be seeing the SPY going up to 420, which would be the S&P 500 going up to 4,200. So it's very possible for things to keep going up. I'm not saying they will, and I'm not saying it'll crash, but I'm just saying we're at an inflection point where we have to see kind of what's happening. So I'm on the sidelines with a lot of my money, kind of waiting to see what happens. In fact, as I told you before, I don't have any good stocks that I'm investing in right now that I feel comfortable with. I have some options, and I think that either the stock market will go quite high or quite low. Right, I think it's gonna crash or it's gonna pass off this resistance quite well. So I'm waiting to see what happens, and hopefully those options don't expire with this thing bouncing around 380. But nevertheless, I have invested in some stocks that I think are going to move either up or down, and I don't know which way. And so I have a strangle. That means I buy an option above, an option below, and I'm kind of waiting to see what will happen. Where is this market gonna go? And so I don't really want to have stocks for the long term right now. I'm very nervous long term. There's so many reasons to be nervous, I think. And this is one, for example, where we might have reached an apex. Maybe, maybe not. So I'm very short term, not day trading. I don't do that, but a month or two in a stock, and then, we'll see what happens. And once I can kind of see the stock market or the fundamentals catching up or something happening which makes me think, yes, things will continue up, yeah, I'm great. And passing 381 would be a pretty good sign for me to feel like maybe I won't be investing for a year, but some of those stocks that I have had for a month or two, well, I could hang on to them and see where things are going to go maybe. But so that's my perspective right now. And so what's really important is when you have an opinion, at least I think, when you have an opinion about a stock, when will that change? What's going to be, the thing, the catalyst that's going to make you switch? Oh, yeah, I was wrong. So for example, this would be one. Passing this 381 mark, yeah, I was wrong. It's not going to crash, I don't think, anymore, at least until we get maybe to the next point of resistance when a lot of people are going to start getting nervous. Similar, idea, Benjamin Graham. Now, he didn't do this, but he would say, maybe, I've at least heard in his name that if you hold a stock for 3-4 years and it does nothing, well, let's rotate it out. And even though I thought that was a good stock, let's pick a different one. And so there's a point where even if he was going to be right, he's decided, this stock has made the case against me, and I'm going to move off of that position. And I think that's actually really important when you're really honing in on an idea and you really believe in it. Well, what will be the point where you say, I was wrong? And it can't be, oh yeah, the stock goes to zero, oh, they go bankrupt. No, it has to be, I think, something more immediate or at least more tangible. Benjamin Graham gave 3-4 years, but he didn't wait for the stock to go to zero. It's just if it didn't move, okay, so that's enough. And I think that's a really key indicator. And so if you have a 3-4 year window, that's fine, but you better choose stocks that have a chance of lasting 3-4 years, of course, without having precipitous drops, right? Benjamin Graham had that safety that margin of safety, I should say, and so he didn't expect it to drop, and if it did, it would drop negligibly. That was part of his brilliance. Anyway, that's kind of my perspective, my philosophy, and a little bit of the technical analysis when I'm looking at the S&P 500. Do I really believe in this exactly? Time will tell, I suppose. I'm not sure I really believe in it personally, but I do think a lot of people do believe in it, and they put a lot of power into this, and I think you can see that kind of from the stock market. It clearly does something, and I don't really care so much why, I suppose. And that's going to bother a lot of people, and it bothers me a little bit myself, but nevertheless, once again, so not stock market advice at all, but just kind of my outlook. You're getting the entertainment, I should say, from my perspective. What am I looking at? What do I hope to see? I hope to see it past 381, and I hope to see it keep going until 420. Right? I don't want the stock market to crash. That's a lot of people's money. So I'm hoping it keeps going up. But we're looking at an apex. We're looking at a lot of things. It might be the perfect storm, and hopefully it's not. Hopefully things will keep going up, but we'll see. Hopefully it'll be like some of these other cases where, it just kept hitting resistance, bumping its head, and then it finally broke through. All right, thanks for watching. Feel free to subscribe if you'd like, and let me know what you think about my perspective. And do you have any of your own kind of, fail safes that, if this happens, I'm out? I've heard of other people, for example, if they lose 25% on that stock, they're out. They'll just cut their losses because once you lose 25%, their whole position or thought was wrong, and they'll just leave. Now, I have heard, it was from Lynch, I forget what his name, but he pretty much said he would never do that because he really believed in the stock, and if it was good at 10, it's good at 4. But, everyone has their own kind of opinion. So what is your perspective for a fail-safe? Do you have any or no? Thanks so much for watching.